Which are the most impactful policy responses in the COVID-19 pandemic?
Central banks around the world have unleashed potent financial weapons, some not seen since the global financial crisis, and some that are brand new. This pandemic is a serious exogenous shock to economic growth worldwide. But by the same token, the response from central banks like the US Federal Reserve, the European Central Bank, and the Bank of Canada has been awe-inspiring. While there are far too many policy changes to cover in this video, we pick three which we believe are the most powerful. First is the US Federal Reserve's Exchange Stabilization Fund, or ESF. This is brand new to the Fed arsenal. It involves using $450 billion appropriated by the US Congress to the ECF, which is actually managed by the US Treasury Department. The Treasury will use the money to fund various facilities run by the Fed. The Fed will use the facilities to purchase corporate bonds, commercial paper, or any other non-government-backed assets. This includes ETFs of investment-grade corporate or municipal bonds. The Fed itself cannot take any losses, and therefore any losses or gains will flow back to the Treasury and ultimately to the US taxpayer. A couple of very important things to note. The Fed has assumed a 10% loss rate for the funds. Therefore, through the magic of leverage, the $450 billion can actually purchase $4.5 trillion of securities, an enormous number. More importantly, in theory, because the US Treasury prints money, there is no limit to how big this fund can get. Next is the European Central Bank's Pandemic Emergency Purchase Program, or PEPP. This has been called ECB's President Christine Lagarde's Whatever It Takes moment, a reference to then President Mario Draghi's famous speech of 2011 to save the euro. The €750 billion temporary asset purchase is similar to the current program in the type of securities it will purchase, but there are a couple of key differences, which makes this program much more powerful. First, it is open-ended, meaning that it will last as long as the effects of COVID-19 are being felt. Second, and most importantly, it enjoys much more flexibility in the amount of bonds it can purchase from countries like Italy, Spain, and even Greece, as opposed to Germany. We see this as a very powerful circuit breaker to keep peripheral interest rates and spreads from countries like Italy low and more in line with Germany. Finally, the Bank of Canada's first ever quantitative easing. The initial QE announcement from the Bank of Canada is for at least $5 billion per week in Government of Canada bond purchases. Markets and the Bank of Canada are in the early stages of working through the quirks in the process, so everything remains subject to change. But purchases will be daily and announced at least one day in advance. The market is viewing this as a good start, but it is already asking what's next. Look for the Bank of Canada to buy more mortgage-backed securities and then potentially move to provincials, where the bulk of the dislocation lies.
Which attractive opportunities are surfacing in this environment?
We are seeing some incredibly attractive opportunities in corporate bonds. There has been a severe dislocation in spread markets, which is why central banks are taking action, and we definitely want to take advantage of this. How good are the opportunities? The chart you see is the spread of BBB investment-grade bonds over government bonds. The virus crisis has caused spreads to widen out dramatically, with only the global financial crisis being worse. Given all the support that is being provided by central banks, as we've noted, we have been selectively adding to our corporate bond positions to take advantage of lower prices and the higher yields, which will provide more income in the future. A specific example would be the Bank of America 3.301 coupon due in 2024. It was only in late February that this bond was trading at a spread in the mid-70s, equating to a price of approximately $105. Recently, the spread had widened to almost 300 basis points and the price was $98.75. We were able to make a purchase there.